Well, now Dungeon is back in Sunnywell, or it's sunny, and I'm here in London.
So this episode marks as our first VC investor interview.
We're really excited to introduce our first VC investor on our podcast, Xuhui from Foothill Ventures, which is a deep tech venture capital firm. Maybe you can talk a little bit about them because you look closer.
So we know Xuhui from more recent investments. So for example, the upcoming IPO of WeRide autonomous driving company. He invested in Zoom as the early stage. And his track record has just been tremendous. And if you'd like to learn more about his investment, feel free to go to Foothill Ventures website.
The job is really to capture those a few less than a handful superstar companies in each fund. So the good news is that there are many great companies in terms of producing the kind of return. But the bad news is that there are significantly more failed ones or bad ones. Our job turned out to be having enough shot on goal, but also to really proactively weed out bad ones. So my theory is that it's very similar to a VC deciding to invest in a startup, because you're joining a startup is investing your time, resource, and opportunity cost, right? So it's actually quite substantial, right? It's very similar to write $1 million check, right? In terms of the magnitude to your life, right?
Good morning, and thank you, Xuhui, so much for joining us today. We're super excited.
Yeah.
This is actually our first episode with a VC. So it's
Yeah.
so great to hear the story from the other side. Before we jump right in, let's do a quick intro. So Xuhui is the managing partner at Foothill Ventures, a 250 million VC fund focused in early stage deep tech investment, with a portfolio spanning from three key areas from software, life sciences, and deep tech. Among the more than
Yeah.
100 portfolio companies, some names you might know.
WeRide AI, which is there's an upcoming IPO, Ascend Elements, which is in lithium battery recycling, D Matrix, Gen AI infrastructure chip, and Hayden AI computer vision for smart cities, as well as Bubble, which is a no-code web app. Before becoming an investor, she has had a successful career in engineering and analytics, being a VP at Yahoo, but before that had extensive startup experience as CTO at Turn, which exited to Singapore Telecom, being VP at ID Analytics, which exited to SAP.
Thank you for having me here. Yeah.
Yeah, I find one really interesting or exciting point to touch upon is the upcoming IPO of WeRide. And I know it's been a roller coaster market since COVID, especially for IPO. Would you maybe tell us a little bit of the journey since investing in them? Like what made you believe in them?
Mm.
Are there any, how do you guys follow up with the journey?
Yeah, it's a incredible story. As you have mentioned, I have a career around big data and AI back in the day. So I know some of the principles, especially Tony Han, the current CEO of WeRide. Back then, he was the co-founder and initially the CTO co-founder of WeRide. But before they founded WeRide, I already know Tony from his academic research and Baidu days, where he's one of the very active researcher in the AI community. I'm also a part of. So we had several conferences and panels together to talk about AI and autonomous driving. And we were discussing whether autonomous driving would become a reality in the United States or in another country like China. And so we took the position that it would become a reality first in China, even though at that time the US has a substantial lead, especially represented by the company later on known as Waymo, has done a lot of research and development in this area. The reason we have blogged it in our website, you can get to the details, but essentially we bet on the population distribution of China is very different from the US. The top 100 cities have more than 1 million population in it, while only the top 10 cities in US has more than 1 million population, roughly speaking. And also the policy of local governments is very pro-innovation and very supportive of vying for being the first city to have autonomous driving or new technology in general. And then thirdly, the driving culture in China is not as deeply rooted as the United States. Most of the drivers and private car ownership is a recent phenomena in China, last 10 years. So turned out to be a good bet. And then WeRide, even though they started in Sunnyvale, they were a bunch of Chinese American AI researchers coming out of Baidu, Google, and other places, and actually not a lot from Google, but from Didi and academic and some of the sensor companies, some of the other machine learning AI companies. And so I happen to know several of the principals and 3 of the co-founders. And so we were the first investor they pitched to, and we decided to back the company mostly based on the strength of their ability to hire top talents, because there is very limited number of people who can really master the complexity of the technology at that time. But it took longer than we expected, as you mentioned, right? With COVID, with all the other things. Yeah. Some of the very crazy stories. Just give you one example. One of their biggest investors later on is the Reliance Group, which is Renault, Nissan, Mitsubishi. Yeah. Still a thing, right? It's one of the top automotive companies. Back then, it was the biggest automotive companies. And you probably know what happens during that time, the 2018, 2019. There's a Netflix documentary documenting the whole thing that the group CEO got arrested. But it was pretty dramatic, right? When you have the big investment and then the leadership of the big giant company investing in you had a dramatic change. But like most of the successful startups, you have to survive and thrive, through many of those up and downs. And I really credit Tony. Right around that time, also, he stepped up to be the CEO, and he did a fantastic job from that point on to lead the company through all the challenges, grow the business, and grow the product line, and grow the technology. And fingers crossed, they're going to be public in a couple of weeks, and we'll see how the market will receive them.
I guess you guys always still believed, despite all the ups and downs, you still believe in the people and the technology and the data, right? And that's sort of.
Yeah, so that's really, I think there's always luck involved. But on the other hand, when you believe in something so strongly and then see it work out, it gives you more confidence that we're onto the right investment thesis. So as I said earlier, that our bet is on people because the technology is very complex. We believe that funding group and the initial 30 some odd engineers and data scientists they hire are the core team, and that is really world class. And so whenever facing those external challenges and noises, I always talk to Tony, and now recent years I only talk to him like a couple times a year because he got so busy. But back in the day, I talked to him more often, and it always gives me comfort when I go visit them and walk the office, and then seeing that the technologists, the engineers, and data scientists are so engrossed in their work, and the team has been so stable throughout those, up and downs, that always give me confidence that this is really the most important asset of the company. As long as this stays there, stays strong, keeps growing, and they can get out of any technology or market or product challenges.
Yeah, especially in this area of autonomous driving, it's pretty crowded and there's no existing solution you can like tangibly see. And well, I live in the Bay, so I can see Waymo cars around the streets, but that's still like far from me. If I don't really wanted to look into it, I would not ever ride, let's say, a Waymo car if I just take a taxi, that kind of stuff. So yeah, so it's not that close to people's lives. So as the first one to be IPO and having that courage to keep growing and early on with this industry still young, it's tremendous. It's a lot going on.
Yeah, definitely.
Hopefully.
We're very excited. Waymo is still the technology leader. I think if they were to become a public company today, the valuation would be significantly higher than anybody else. But in terms of revenue, right, WeRide actually has more substantial revenue than any other known autonomous driving companies. If you read their prospectus, that you can see that they're actually having very substantial revenue from multiple of their product lines. So yeah, hopefully the market turns right, and we can see that they do well.
One question that I had was reading through an article from Reuters. They were saying recently, just this month, August, AI deals have been increasing significantly for the VC funding rounds, and to the highest level in 2 years. Well, our personal take is that, well, from 2021, early 2021, the VC funding has been trending down. So it's just been picking up now. But the amount of the percentage of AI companies or AI investment has been growing significantly. We're curious if it's because it's so easy to put on an ML or AI tag onto any investment. If you run any smaller, let's say a model behind your company, that kind of stuff.
Yeah, definitely. So last year was a big surprise for a lot of the economists and investors because such a high interest rate. Many people told me that you should expect a very small return on the stock market, and everything to converge to a low percentage level because the high interest rate, that capital are very reluctant to take on additional risk. But the reality is that, as we know, right, last year, S&P 500 rised almost as high as ever, right? More than 20%. And because there was the so-called Magnificent Seven or the AI wave that lifted all the indices. The same thing is happening in the VC community. That I think there's definitely a herd mentality in the VC community. Fear of missing out is definitely real, and it is also very easy to do thematic investment, like you said. There's for entrepreneurs, since you've been talking to a lot of them, it's easy to put an AI ML tag. It is also easy for the investors to look for it, right? There's a reason that these two things happen at the same time, because there are also investment dollars looking for that label. It's really easy to do that, get sucked into it, but it's also very risky. Because as you know, that startup is such a high risk business, and then if you're not careful, it's very easy to bet on the 90+% of the ones that are also runs or not so successful, or even complete failures.
So what have been some of the key areas you've been seeing to get funding from early stage VCs?
Yeah, so I think there's definitely a lot of noise initially in the shallow application, or some people call it AI wrappers, right? You just call OpenAI API and then, try to solve a subset of questions. And we try to avoid those because uh, our fund is a deep tech fund. So we want to focus on startups has a technical moat, right?
Yeah.
So it turned out to be very relevant for AI investment, for Gen AI investment. As you can see, the first couple batches of YC companies, most of them didn't fare really well because of being very shallow.
Yeah.
So we break this down into 3 dimensions. Platform, infra, and applications are the 3 corresponding areas, and then the 3 dimension being algo, compute, and data. Right. So for platform companies, usually it's the differentiations on algorithm, and for infrastructure companies, the differentiation is compute. And then for application companies, the differentiation is
Data.
high quality proprietary data asset.
Mm.
So that to me is a good framework for us to kind of break it down into those areas of most of the AI companies that we look for.
Yeah. So around the framework that you talk about, can you walk us through some, let's say, 2 or 3 key investment across industries that Foothill have positioned itself this year?
Yeah. So I think some of these plays takes a longer to materialize. I'll start with the application. Application is easier to understand and also the quickest. So Supio is the company that we just closed the A round. We initially invested in them in seed round last year, one of the first companies in our Fund 3. So I haven't checked the announcement. They should have just announced either today or later today. So by the time you have
Nice.
the podcast, they should announce the A round led by Sapphire Ventures. And so it's a very, very successful, strong A round. They are a legal tech company applying combination of Gen AI and classic machine learning. The reason they're successful and the reason we're betting on them, there's definitely the founder aspect, but also because they find this niche in legal tech that you can't just simply apply Gen AI LLM API calls, because legal tech requires very high accuracy and
Right.
repeatability and reliable answers. And so they have to build this hybrid tech stack. And but in the end, the founders turn out to be really well suited and really well executed. And so their revenue traction just jumped up very, very quickly, and the growth has been very, very consistent, even though it's only like a year old.
Yeah.
The infrastructure company takes a little bit longer. For example, we bet on low power AI inference chipsets. There are 2 of them, Tetramem and D-Matrix, a few years ago. We didn't know that at that time when we first made an investment that this would be used for Gen AI workload, right? Especially in the case of D-Matrix. So it's a happy coincidence that the technology have met the perfect demand, right? But on the other hand, you can't just see the demand and then look for solutions. It's just too late, right? Because hardware semiconductor takes a long time, right? You can't just say, oh, even for most of the big winners in Gen AI, if you think about their critical funding rounds were done a few years ago, right? You can't just say, oh, we saw ChatGPT, now let's look for like the next OpenAI. that is probably too late, right?
Yeah.
Go ahead.
I guess like when like Google, they have like their own TPU, they probably haven't like imagined how this can be powering their infra.
Yeah, so you're right. So that's an interesting case is that on one hand, Google also have the foresight to invest in their proprietary chipset in a TPU because they already have huge amount of workload or compute load for their own business. On the other hand, what they have missed, what they haven't done, in order to challenge NVIDIA is all the general purpose software training infrastructure represented by CUDA and all the thousands of little innovation that bake into CUDA. We know a little bit because NVIDIA last year acquired one of the company we invest in called OmniML. So this is probably one of 100 different things they have incorporated into the CUDA system. Many of them are internal, some of them are through acquisitions. So we have a little bit firsthand experience how substantial that moat is, and then still keep growing. So it's very hard for other players, even established players like AMD, to challenge them.
So did you miss any of the investment that you didn't do? You wish you have invested in?
Yeah, so the reality is that we missed most of the blockbuster companies, right? Especially in the hot sectors like AI or software in general, but AI specifically. I remember one of the investors, told me in a friendly way, but also, just it's also very, very poignant. Like, is that like, oh, you guys you had a career in AI, but you missed all the biggest, Gen AI companies. How come, right? I said, okay, yeah, that's the reality in VC. Is that if you read there's a book called Power Law. The name came from this well-known fact that most of the VC, especially early stage VC funds, follow a power law distribution, which means that majority of the profit came from a very, very few top investment.
Yeah.
And so the job is really to capture those a few less than a handful superstar companies in each fund. So the good news is that there are many great companies in terms of producing the kind of return, right? So it's hard for a billion-dollar company to become a trillion-dollar company, but it's relatively easier for a $10 million company to become a billion-dollar company, right? Return multiple is the same, but it's a lot easier to grow a smaller one into a decent size winner. But the bad news is that there are significantly more failed ones or bad ones, right? So our job turned out to be having enough shot on goal, but also to really proactively weed out bad ones, right? So, of course, bad is all relative, right? So what we're trying to do is that go from decent companies to great companies, right? We don't want to invest in average, good, decent companies. We want to invest in great companies, right? Of course, in exchange, we're willing to take on some risk, right? So if the potentially great company failed, we'd rather have them fail than having a mediocre outcome, right? If that makes sense.
Right.
Yeah, exactly.
Sorry, like I was just saying, like it plugs great into another question I have in mind. It's about from a TEDx talk you gave 10 plus years ago. You're still at Turn. You mentioned people who are not afraid of uncertainties, I guess risk, are better investors. Do you still agree with that today as you switch the sides?
I always find the human psychology fascinating, and in this case is the investor's psychology, right? So I know this a while ago that people are in general risk averse because the pain people experience from losses of the same amount is about like 4 times as more intense as the pleasure they experience of the equal amount of gain. So there's many famous experiments that lead to this kind of quantitative belief. So that is, I think that has a evolutionary root that it turns out, animals or early humans, you can choose to spend your energy to avoid risk, or you can choose to use your energy to pursue a prey or greater livelihood, or taking risk or avoiding risk, right? And then turn out like the survival instinct is what helped early human to survive and thrive. And but in modern society, that instinct is sometimes no longer optimal, right? That's why Warren Buffett is successful. He said a lot of famous quotable things, but to the effect of like when he want to be greedy when everybody else is scared, right? Because he knows that there's a asymmetry in that. But I think that's kind of also true in the VC investment, is that since we know we're looking for those home runs, and which by definition carries more risk, and so we want to design a system that can tolerate outsized risk, and so that we're not leaving behind those high potential, high risk bets.
Following up on that, how do you design the system to tolerate more risk or embrace uncertainty? Or how do you balance your portfolio in terms of risk and industry focus, for example?
Yeah, so the risk management question is easier to understand, easier to also answer, in that we design a portfolio of certain size. Let's say our ideal portfolio model is 50 investments in each fund. Let's say our current fund is about $100 million, so we plan to make 50 investment in 50 companies. And so when we make those investments, we want to make relatively independent bets, right? So if binomial distribution, because we care about the binary outcome of whether they are a great company or an outcome that we don't care about, like whether they lose money or they return a little bit, then it's a miss. But if they're super successful, these are the ones that move the needle, right? And so if they're relatively independent bets, then we can expect that the hit rate would follow statistically historical track record. And because we have invested in hundreds of companies before, and if we stretch into our angel investment days, that's a few hundred more companies. So we have this historical data that can help us calibrate the statistical model, so we know that what to expect. And so that allows us to take more risk on each individual investment. And so we hide the risk in numbers, so to speak, right? So in terms of the industry allocation, that's a combination of art and science, right? First of all, we obviously want to look for things that fit us, right? For example, we never invest in consumer product. We never invest outside of North America. We never invest in later stage companies. So these are the 3 things that we don't know about. We're not good at, right? We're not good at market or consumer. We're not good at due diligence outside of our network, mostly in the United States, in Silicon Valley, or some other hubs in the US. And we're also not good at looking at later stage company where it's mostly financial analysis, financial engineering. And so on the technology early stage, US entrepreneurship, then we further identify a few key areas for us to focus on. For example, our current fund focus on AI, including both AI infrastructure and AI vertical applications, and energy transition, and then neuroscience. The reason pick those three areas are, first of all, we have some technical expertise across those areas from our different partners. But more importantly, we believe there are disruptive innovations in those areas that can result in large scale impact, right? So the two necessary ingredients for profitable VC investments.
I think like just on the vertical side, I'm personally quite interested in like VR, AR, and singularity. The same TED Talk I mentioned, they're talking about like instead of like using maybe 10,000 hours to master skill, people can save in 1,000 hours, which is like similar to what the Neuralink they're trying to make a claim recently. So what's your like bet on that from like back then to now, and like are you making any new like investments in similar areas?
Yeah. So that's one of the core belief behind the area of neuroscience and brain tech that we want to focus on is that if you look at life sciences or biotech in general, this is the last frontier that science is trying to penetrate. Right? We still know so little about our brains, and this 10,000 hour versus 1,000 hour. I totally forgot I said that 13 years ago, but we still don't know, right? Too much about when I look back, we haven't really made a lot of progress in that. The part of the brain that we don't know too much about, still far more efficient than the latest, greatest NVIDIA GPUs, right? In terms of computation per watt, right? It's
right.
It's still like
I think it's
nature still beats silicon, right?
Like 20 or 30 watt, and then you can just do all these sort of recognition.
Exactly. If you compare to insects or jumping spiders, that is astonishingly huge gap. It's like close to 7 orders of degree of magnitude difference in terms of power efficiency. So I think the brain tech part is also interesting. I think AR VR is today's AR VR is only scratching the surface, right? With better compute, with better sensor, and hopefully better brain compute interface. Only the limit is our imagination.
Like you don't need to wear like a headset or something. That's just become buggy all the time.
Yeah.
So and also like briefly, I guess just we're interested in your background on the startup side. What's your consideration before jumping into a Rose as startup as a first generation immigrant? Because a lot of people our age, I think, are trying to play it safe and be like stay at big tech. What made you want to do those choices, and are there any regrets or learnings you get from it?
Yeah, so I think I got lucky that after I got my PhD at that time, I was able to get my green card very quickly. First-gen immigrants at that time, which means 20 plus years ago, that worry about just having a stable job and raise family, or just have the roof over your heads and so on. So they tend to be more risk averse. But I was able to find the opportunity to join Idealytics at the right time, become the main technologist and inventor of Idealytics, and took the jump into the startup world. So once I, jump into that world, there's really no turning back, because it's so fascinating. You learn so much. And, I remember after my second startup, after Turn, like first week, I joined Yahoo as the engineering executive at VP Engineering. I just feel like, wow, I have such an advantage being on the startup side, that because it forces you to think problems holistically, forces you to talk to the entire market, talk to your customers. While at a big company like a Yahoo or Google, you're so buried, right? Even if you're a fairly senior executive, you're still very, very siloed. You never get to, talk to sales much. You never get to talk to your big customers. You never get to, be part of the entire market, unless you're really the CEO, right? Or really, really, top, product line owners or head of sales. My learning has always been that, yes, it's cool to experience how large companies are run. And if you have a chance to become a, senior technologist or senior executive, it's kind of nice because you get a lot of support, you get a lot of financial benefit as well. But startup world really give you accelerated learning, give you, this push, this focus, this exposure. I highly recommend people to take that risk. And what I see in recent years, the newer generation of immigrants, the young immigrants, or second-gen immigrants, it's much easier for them to take the risk, because there's less concern about survival, or like Elon Musk famous said that you can't starve to death in this country, right? Because you need so little to just buy ramen.
Yeah.
So really, should just take the risk, take the jump.
I want to follow up on that because we're both, well, Zhaohan is working in a startup now, but I have no experience working in startup. I've always been curious about when you are joining, before you're joining a startup, it's you have to have like knowledge about whether you believe in the product, or you believe in the people, or you believe in the industry. But what is your evaluation system in before joining a startup?
Yeah, so because I also am part of a mentorship program for the last 10 years. And so I talked to a lot of people having similar questions. So my theory is that it's very similar to a VC deciding to invest in a startup, because you're joining a startup is investing your time,
Exactly.
resource, and opportunity cost, right? So it's actually quite substantial, right? It's very similar to write $1 million check, right? In terms of the magnitude to your life, right? Impact to your life. So I actually share how we, due diligence startups with, the mentorship program people. And so they find it kind of useful perspective. And so basically, the more tangible thing is that once you are under that mindset, so you know what question to ask, right? You're judging them as if you put on your investor hat. Like, is this a good company? If I have $1 million, would I invest in this company? Right? Can I talk to the investors? Right? Can I talk to your board member? Right?
Yeah.
Because sometimes they may say no, but what's the worst, right? You say no, then you try something else, right? But ideally, you get to talk to the founders, right? One of the co-founders. I was like, why do you build this company? Like, why do you believe that you're going to be the leader in the world in this area, right? What's your vision? Like, what's, being done successfully? What are the regrets? If the company failed, what do you think the reason, right? All these kind of like
Yeah.
questions. And if you can have the opportunity to talk to the investor, talk to the board member, then it's even better because they definitely have thought about these things, right? And
Yeah.
if they're honest enough, they will share that with you, right?
Yeah, that's great advice.
Yeah, then there's the rest is pretty similar. Like a large company, you want to see whether you fit in, and how do you like to
Culture.
manage it?
Yeah.
Because, yeah, cultural fit, because it is the number one reason people leave a job is strategic differences with their management or
Yeah.
don't fit in with their managers. But I would say that the different bit on startup is to think like an investor.
Yeah.
Would you say the same thing about like finding a co-founder as well? Because
that is yes and no. Like, I think you also want to do a lot of due diligence. That part is similar, but finding a partner is very different than deciding on employment, like whether you join something as an employee versus you join a company as a co-founder is very different. And same thing is that if you are hiring an employee in a startup company is very different than if you're trying to convince someone to join you as a co-founder. The reason being that the co-founder breakup is more like a divorce, right? So it is substantially higher cost, right? So that's the like employment, in California is all at will. I don't know about London or UK, but in most of the US culture represented by California, it's at will employment. And so either side can walk away. So it's fairly low cost of yes, if you hire a senior person, of course there's more costs involved with a bad hire, but not as much as a co-founder split.
And another question we both have, like me and Dungeon, is that since you got a PhD and wonder about like your take on like getting a PhD in the current era, especially I guess like when we look at some founders, either that it's very deep tech as what you invested in, or it's sort of like easy to build a SaaS platform because of so many frameworks out there developed by Google or Meta. Do you first, do you see the bifurcation of these tech stack, and like do you think PhD is relevant, and if so, how?
Yeah, so first, my own journey, I came here after I graduated from Tsinghua in Beijing, and so the only path for me or the path of least resistance to get into grad school. And so that's how I, applied to the PhD program. I got admitted to a few of them. And then I picked one that gave me the full scholarship, right? And I wish I, had the money that I can pick, not just based on money, but no regrets. I really like my PhD program. I learned a lot, and it helped me in my career, because that's kind of the more utilitarian aspect of it. For first-gen immigrant, that's usually the path to get into the country, to get into the industry. Now, when I look at from a VC investor standpoint, 85% of companies are immigrant-led because we focus on deep tech investment when there's a substantial percentage of immigrant founders in deep tech. As a matter of fact, I think 58% of the deep tech unicorns are funded by immigrants. The second number is that 75% of companies are PhD led. So that's the more relevant stats. The reason for that is for deep tech, especially biotech, PhDs and MDs are necessary, right? Because it just takes that much to be able to have a firm grasp of the innovation, the science behind it. And for software companies, the percentage is lower, and also it's less critical. Like, for example, someone may have a PhD like me simply because of the career path they have. But when they're building company, they don't necessarily leverage directly the things they learn from their PhD research. Now, on the other hand, in my own experience, the PhD is less about the research, but the ability to research and also to think independently. It's very rare that in your career you have the kind of this environment that forces you to think independently, right? Once you get into the workforce, it's more often to have teamwork, the focus on collaboration, the focus on consensus, building consensus. So that it's not conducive to independent thinking. But in this rare occasion, like building a startup company, as a founder, you do need occasionally think very independently, right? Especially for the super successful companies. And it's not like a copy of other people's idea. It's not a just try to learn from what other people are doing, or try to be popular, or try to follow the consensus. So that I think may have some edge for some of the PhD-led companies. But there's also a very practical matter, is that most of our PhD founders, this modality works because they come out of the research lab and they try to commercialize, years and years of research work.
Right.
So that naturally,
I think
lended to the stats.
Off the top of mind, I think about Databricks and how they
Berkeley.
sort of, with Spark and everything.
Yeah, exactly. You touched upon very key points about the characteristics of a PhD. For example, grit and perseverance and dedication. That really resonates with some key characteristics of being a founder of a company and to go through the ups and downs. Is there any founder story you want to share with us today that really demonstrate this dedication of a founder, no matter if the company is successful today or not?
Yeah, so I think the first founder that jumped into mind is Tom from MPub. So Tom is the co-founder, CEO of MPub. It's an EV charging company. Tom went to University of Illinois at Urbana-Champaign for his undergrad study in computer science. So kind of similar background as you guys, maybe a few years older. And then he joined Yahoo, actually my department after graduation, because at that time I have a team in the Champaign campus. So there's a research park, right in the middle of the campus, and there's a big team there that work for Yahoo, and he's part of that team. But I didn't know him too well at the time because he's a new engineer. I have a relatively large team. But after he left Yahoo, and also I left Yahoo, he first went to Twitter and then had a couple of years of very successful career there. But he wanted to build his own company, and he pitched me twice, and I said no twice because the first idea was I don't believe in this technology, and the second one was, oh no, this consumer, I don't do consumer, and then the third pivot, it pivoted into B2B. EV charging and fleet management. I said, wow, that's a good area, but your timing is terrible. It's the middle of COVID. Nobody's driving, right? How do you grow your business? And so that's where I first learned Tom's resilience, is that he managed to grow his company during the middle of COVID. and just purely by willpower and diligence. And he has also brought on board multiple top tier strategic investor from the automotive industry, from the energy, solar, and utility industry. And so I was so impressed by what he has achieved with such a small budget, small team, and that's when we wrote the first big check. But EV charging, working with utility, energy industry, fleet owners, and EV charging manufacturers is hard business, and it's very challenging. And the leaders is Tesla, right? So it's a very powerful companies, and many other well-funded competitor as well. So I think the only reason that EMPA was able to not only survive but also grow their revenue, and they just closed a $6 million round, which will give them a clear shot to profitability, and brought on some of the very iconic investors in this industry, like Touchdown Ventures and the Auto Tech Ventures, is purely because of Tom, right? He's able to hire people and surround himself with experienced industry veterans, and then build trust across all the ecosystem players. So every time we write another check, we call their partners and the customers, and overwhelmingly, they all have very, very positive experience working with the company, building trust with Tom. And so I think this is, despite of how big the success EMPA eventually will become, this to me is like the founder resilience story for me.
Exactly. Yeah.
It's like 2020 is like when people are like, we're like scared about COVID. No one's like doing anything, and like all of a sudden shift to remote working and everything. It must be like isolating for a founder.
Yeah,
and he was able to
hard.
keep
It takes a special kind of people. I think he is a special kind of people.
Yeah, I was just saying Tom was able to at that time to hold the morale as well. That's tremendous, to hold the team together and keep going. That's
I wasn't there in a day-to-day fashion. I don't know how he did it, but from an investor standpoint, some founders are able to just instill trust and confidence in others. I think that's a quality that cannot easily be taught, right? It's almost like the cliches that you're born with it, or you're not born with it, right? But I think being a driven, genuine person, and truly enjoy what you're doing definitely helps as well.
I think that's maybe all the questions we have in mind. It's really, really fruitful interview with you, Xuhui. And like it's being our first investor interviewee, and it's our pleasure to have you.
Thank you. I enjoyed it. All the questions are great, and hopefully this little chat will be helpful to your audience.
And,
exactly.
Again, like, congrats on the upcoming IPO of WeRide.
Yeah, I'm very excited for that.
Yeah. Well, we're also very excited.
This podcast is for informational purposes only and is not intended as financial or investment advice. We do not guarantee the accuracy, completeness, or timeliness of the information presented. This podcast is not an offer or solicitation for the purchase or sale of any financial instrument. Thank you for subscribing, and see you again soon.